What's going on, everybody? Welcome back to another live stream here with the Everyday Growth Advisors. Hope you are having a good morning or evening wherever you are. Happy Monday. It is another week here and we have a pretty interesting week ahead of us. A bunch of things that will be happening this week. We'll have volatility come back just a little bit. So let's get this broken down and peel this onion. Okay, so I sent out the newsletter like about less than 30 minutes ago. So please have a look at that one. Important newsletter this week. We have a lot of moving parts. Now, the thesis is still the same. We have been expecting the same thing for a week or two already. I mentioned this big wave up will be leading into a consolidation zigzag wave to this trend line more than likely. Before we find some kind of a support at around 40.60 or maybe even spill over a little bit below 40.60 to find some of that liquidity grab so that we can rally into this upside. CTAs remain in a positive buying territory, which means that any dip is likely to be ripped right after. So I would pay very close attention to any dip here and be prepared to buy it. Of course, that doesn't mean to say that we can't break down and go further down here at 39.40. That's going to be if earnings come out very, very dismally on Friday and then next week. Okay, so leading up to that, we're likely to see a lot of people get shaken out in this market going sideways. And if we don't see opportunities that are going to move, we're just likely going to play it very tight to the vest until we see a directional market or a breakout or breakdown of some kind. Remember, this week we have CPI that's going to come in on, I believe, Wednesday. We also have the Fed meeting minutes that are going to come in on Wednesday, I believe. And then you have PPI, I believe, on Thursday. You have a bunch of other news that's going to come out on Friday as well. I've put it in the email, the newsletter, just to make sure. Yeah, so consumer sentiment data on Friday, retail sales data on Friday, March PPI Thursday, CPI Wednesday, along with Fed minutes. So that's what you're going to expect for this week in terms of news that will drive the market. Now, CPI, as long as it comes in line, I think the market's not really going to shake much. But however, I will tell you guys that as our thesis from last week still plays out, I am still seeing continued selling on infotech, which is the biggest sector within the S&P 500. So that is going to drive weakness, general weakness in the market and NASDAQ, so to speak, in this week and the weeks to come. If for some reason financials are not able to recover strongly or give us a positive earnings, remember that earnings starts this week again. I put it also on the newsletter, right? We have JP Morgan, we have Citibank, Wells Fargo, a bunch of them all reporting on Friday. And if these banks don't really come in line with expectations or do better than expectations, then the market's gonna throw a little bit of a fit, and we'll likely get a 5 to 10% correction downward, which is very nominal in a bull market. Okay, so as you guys know, the Nasdaq is already down, is already up 20% from the lows. So as you can see here, right, we're at 24% from the lows. That means that the Nasdaq is officially out of a bear market, right? As of last week. All right. So as of last week, we are officially out of a bear market, and now we are trying to clobber our way back into a bull market. Now the S&P 500 is not there yet. The S&P 500, I believe, is, let's see, to here where we are. That's 17%, right? And last week we got as high as 18%, but we're not out of the woods yet. So the S&P 500 still remains kind of in a bear market. But remember, because Nasdaq is a bigger weightage of allocation, it's going to have majority of the firepower here. So in terms of where the Nasdaq is sitting, we need these infotech stocks to continue having strength if we want to see continued pressure to the upside. Now, the worst sector, or the worst performing sector, has been small and mid caps, which, obviously, rightfully so. We talked about this, but then I also see this as a great opportunity for an eventual rotation, right? So you need to also think about small mid caps as potentially when they start bottoming out at the 169 level, which is a key pivot for bears at some point down the line in the next 1 to 2 weeks. If we get down into the 160, low 160s, I think this is a great opportunity to add some long exposure once again, right? This level here has been a very strong demand zone, right? You can see that this whole area here pretty much has been a pretty strong demand zone. So I would definitely be looking at this sector and some of the players within this sector to look at opportunities. But remember, the thing about investing or trading IWM is majority of these businesses are strapped for cash. They require looser financial conditions, which is not what we're getting right now. Now, the main headlines that we're seeing, pessimism is almost at peak right now, and there's a record amount of cash sitting on the sidelines waiting to be deployed in the market. So all of these things point to me that investors are just ready to pounce on the market. Now, one thing you need to understand about the stock market is that it is not the economy, okay? And that is an important thing that I'm mentioning, because you need to remember that if everybody is bearish and everybody's buying protection against the market is not going to move that way, right? It's just like if you're expecting the COVID crash would have never come. But, it's just like the market never gives you what you think is going to happen. And so if everybody is bearish, then the likelihood that the market's going to come further down is very low. Instead, it will continue to melt up. It will continue to do the things that nobody wants. The most painful trade here is for the market to continue melting up. And so I think that that's what's likely to happen as long as we can continue to trap players down here and go a little bit further down. We're likely to see this continue to get bought up. All right. So that's really my thesis. After many, many years of doing this, I have seen this happen time and time again, where people get too bearish and then the sentiment changes, and then, they're too late to the party trying to scramble for exposure. So that's important. Now, the other thing that you need to keep your eyes on is the US 10-year. The US 10-year came down significantly in this past month of March to April, right? And now that we're in April, you can see that we have been on a pretty sustained downtrend so far. And if we don't get out of this muck, then this is good for technology stocks. This is good for a majority of the stock market, because this does a couple of different things. Even though yields are coming down and people are buying bonds, you need to understand there's two sides to this coin. The first side is people are buying bonds because they expect, or they want to lock in this high yield that people have been craving for. A 4% yield on a 10-year bond is pretty decent. Versus the S&P 500 earnings yield, which is lesser than that, right? So if you're a smart investor, you locked in some of these bonds here, and then as people started to buy these bonds, now lesser and lesser people are going to start to do this. So that's one side of the coin. The other side of the coin is investors are actually buying bonds because they think that a recession is on the way. Most of the recession is largely priced in, but a deep recession is not priced in at the moment. So that might be one of the other sides of the coin that we have to entertain. Remember, you can't just have one bias. You have to always look at your view and your angle of the market from both sides, so that you understand both sides and you trade around that, right? You're not going to just say, okay, I just have one side to my thesis and I'm just going to go with that. The market's going to zero. That's it, right? And you don't have really anything to back it up. That's a poor way to look at your own hypothesis, and that's going to get you killed eventually, right? So you have to be very, very careful with the way that you deal with your own expectations and your confirmation bias. So now, as technology stocks benefit from the lower yields, the reason why this is so is because, remember, the 10-year yields are used in the calculation for most valuations in stocks, right? So if the discount rates of those stocks start to go down, then the valuations of those stocks start to go up. So there is pretty much two sides to this coin that you have to be aware of. Not to mention, the dollar index has been kind of getting bought up just a little bit here, right? Oh no, remember how we had last week, like, oh, the US dollar is going to go to zero and, it's going to lose its reserve status. Yeah, guys, the market doesn't think so, right? Maybe eventually in the next 40 years or 50 years, but not immediately. I spoke about this at length. I even posted about it on IG. You guys got to chill with that. Just chill, all right? That's not going to happen anytime soon. So let's have a look at some of these opportunities this week, now that I've kind of covered everything that, the last thing was the VIX, right? The VIX is kind of sitting at around 20. Yeah, just, chilling in the good zone, right? So not really much there. Apart from that, Micron gapped up today this morning. I'm not really sure on exactly what news, but there was some news. I think there was positive news for Micron. This is the top pick for the weekly play. Disney. Potential break out of $100.50 or potential breakdown from $98.50. Be watching this for a potential range break. If higher, better. Lower, also better. We can trade both ways. Don't need to pick one. Another one is Walmart breaking out of a potential pennant here. Not actually long until we get 154.50 test, and then a pullback to retest this bottom zone here at 150. So I don't want to play this upside right here. It's a huge wave up. We wait for the corrective wave, and then we can enter Walmart on bullish play after that. Moderna was also up about, I want to say 2%. Oh, not anymore. It was up about 2% earlier. They had some news come out for it. And this one has been one that I've been watching for a week or two. We're already in this position. So this is one of the plays that we're watching as well. One of them that you have to keep your eye on, though, is Apple. And Apple is in a dangerous spot here. It's been, it's rejected this area multiple times before. You will have to really watch Apple closely because it gapped down today, and this is really going to drive a lot of the price action in the S&P 500 and the Nasdaq in the next couple of weeks. So, and Nancy Pelosi apparently bought a bunch of Apple stock, but you know what? You shouldn't be playing into that news. It doesn't really matter. Ignore the bullcrap about Nancy Pelosi. It shouldn't matter to you at all. Just trade what you see rather than following what other people are saying. Always remember that there's never going to be a better analyst than the analysis that you do. Okay, so make sure you stick to that. There were some interesting plays with CrowdStrike last week. Remember the bearish play on this one? I posted it on the newsletter. This one played out pretty nicely. Wanted to just bring your attention to that. And then Tesla cutting prices again, trying to still steer the market in its favor. If it stays below this 179 level today, it could be painful. So we obviously want Tesla to get somewhere into the 180s today. But the market at pre-market here is kind of looking weak. Okay, we have gap downs on Apple, Microsoft. We have gap down on Amazon. We have gap down on almost all of the mega caps, right? So we're gonna have to look at other pockets of the market to trade. And circumvent some of this momentum. Even Google is down pre-market. And that's going to be the only way that you're actually going to get a opportunity. Okay, so keep your eyes open for those opportunities. Remember, you still have 14 days free trial. We're going to be continuing the 5K challenge this week. For those of you that have not been paying attention to the 5K challenge, the small account is currently up about $152 over 2 weeks. Now, I know that might seem very little to you guys, but trust me, this is going to snowball in due time. So look at the consistency. That's the most important thing. We've been closing out consistent profits with a decent risk to reward ratio. And that's what we really want to be focusing on. That's the reason why, members in the Discord are achieving the success that they are. For example, Dylan here, who said that he had a perfect trading week using a smaller account following us in the 5K challenge. And, he's been helped pretty nicely from this experience. So, it's just one of those things. And you can see that this is his trade journal for the week, and he's done a really good job for himself, made about $300. That's all his trades that he took for the week. So just wanted to put it out there. You still have the opportunity to join us this week through the free trial. Make sure you click on our link in the description, and you'll be able to get straight into the Discord and join us. So small account is up about $152. Big account last week was up about 18,000 or so. This was it was a decent week. I'm not gonna lie. All green pretty much, but I haven't closed out some trades, so I will take some losses in the weeks to come. But I won't take them right away. So that's that, and that's all I kind of have for you guys today. There's not really much else to go over. Oh yes, CPI expectations in line. That would be good. I'll post. If you're part of the Telegram group, I'll post the CPI expectations on the Telegram group closer to the date, and also on Discord. And then also the playbook for CPI. Usually I'll get a playbook for CPI, and so I'll share with you guys if I do. As far as earnings, I already went through that. And then Fed minutes are not really going to be a high impact event, but it'll be like a medium impact event. So there'll be like a slight increase in volatility. So we'll see how to play that eventually. But as of right now, today, we really want to focus on this pullback on SPX at 40.60 and see if we can get a nice bounce. Maybe not at 40.60, but maybe at 40.50 or 40.40. Those are all acceptable levels at which SPX can bounce into these dual zones down here. And then, if SPX moves sideways, that will give us a nice little landing way to potentially take this bull flag into the next level up. So that's what I'm kind of looking at. And if you have questions or you want me to do any charts right now, put it in the comments right now. Other than that, I really hope that you guys can smash the like button for me and leave a subscribe if this is your first time here. I do appreciate you guys taking your time out to be here, so make sure you just smash the like button. The YouTube algo really needs you guys to smash that like button. PayPal looking for 77-ish this week to profit. Okay, let's see. Let's see, my friend. PayPal. Okay, it's been range trading so far. Yeah, it needs a nice break above 77. Yeah, personally, I wouldn't touch this until it gets above there and starts forming some kind of a range or some kind of a consolidation above this level. This level has been a very problematic level for it, so you have to be patient with this one. I would say don't buy the contracts just yet. I would say wait for it to break above, and then you can possibly play 80, or you could even play 82, and have that nice little gamma exposure, rather than trying to go for that kind of play right now. So, yeah, I would wait a little bit on PayPal. I wouldn't do it right now. You know, you don't have any guarantee that this thing's gonna run up. That's the main thing that I would say. The market could sell off, and then you'd be stuck with your contracts. So wait. Don't immediately buy the contracts. That's my recommendation. Anybody else? Any other trades? Microsoft is looking pretty nice here. If we can get some consolidation, further consolidation. Okay, I don't see anything else. You guys there? You guys have anything to say? You guys have a good long weekend? Did anybody get drunk? Did anybody lose their clothes and jump in the pool? Project X style? Nobody? Okay then, I guess I'm just gonna talk to myself then. XOM, okay. It's inspiring to hear you. Why? Why? How should I explain that? Explain why it's inspiring to hear me. I'm confused. Okay, XOM. This has been on my radar for a while. I personally, I have a different way to look at energy right now. With all the news with OPEC, I think it's a little misleading to say that oil prices are going to just continue ripping to the upside. However, I've been seeing some very mixed signals lately. And then the other thing about XOM being here is you're sitting firmly in between a upper range and a bottom range. You're literally right in the middle, right? So if this is the bottom range and this is the upper range, then and you're in the middle, the risk to reward ratio on either side is terrible, right? You don't want to play this. That's terrible. So you want XOM to either go to the top range at 120 or break below the bottom range at around 108. Then you can make a more educated guess as to where this has, been going. I'm in banking and it hasn't been the best few months. Oh, yeah, I know what you mean. Yeah. As I mentioned on the newsletter, banks are not going to have a great time until financial conditions loosen a little bit. And that's unlikely to happen until, I want to say, sometime in next year. So we're going to have one last rate hike. 25 basis points in May. April, there's no Fed meeting, remember that? And then after that, you're going to see the Fed will probably pause rates if inflation continues its downward trajectory. So it's all really going to be data dependent from here on out. Let's see. So Levon, I hope I helped you there. As I said, wait for this to get to either side. Trading it here is a gamble. That's my honest opinion. But if anything, I'm still bearish on oil and gas. I know it might be a little bit of a alternate thesis, but that's the thing. It's like, you got to remember. Cool. Okay, McDonald's. This one has been on a rip, right? So this is a terrible one to play to the upside, right? So this is a simple thing, in my opinion. This is where moving averages do actually come in handy, right? So very simply, here's the best way to look at this, Dustin. So let's say I'm using all my EMAs, right? And I'm looking at the daily. By the way, McDonald's is intrinsically overvalued by at least 10% right now. So its intrinsic valuation comes down to around 260-ish. This range here where it was trading was close to its intrinsic valuation. So it's trading a little bit above intrinsic valuation. And so if that happens, you have to wait for this one to come back down to earth. Okay. So on the 4-hour, assuming that it stays up here longer, then what's going to happen is this EMA is going to start to get closer up here and likely meet this somewhere around, 277, 280, somewhere around this level. It could even come down to 275, you don't know. But basically somewhere around here, right? Now, would I want to go and short this? Maybe. You could short it with a good risk-to-reward ratio, but you would want it to try and attempt a break at all-time high before you do that. You want to actually see this thing try to break this high here, and then if it fails to break that high, then you start to short. Because right now you only had one, I think it was in price discovery, wasn't it? Yeah, it was in price discovery, right? So you had one attempt in price discovery, and then after that price discovery, you never got a liquidity rinse. You kind of never even got a retest. Remember that when you have one wave up like that, you want another, like you want buyers to step in and try again before. Like that's how you avoid fake outs, right? So if you take the downside risk now, then what happens is you could get faked out to the upside. So wait for it to go back up and try and test that upper limit again at around that 285 level. And if it fails to break out that 285 again, then it's likely going to consolidate sideways, and I wouldn't take it short until it breaks below the 281.50 level, right? So then once it breaks below that 281.50 level, you can take that short exposure and write this down to around, let's say, 277 or 275, right? Puts. And that's the way I would look at it, just from a trade perspective. How do you set it up, and so on and so forth. So that's what I would do, and that's how I would play it. So yeah, I hope that was helpful. Anybody else? Any other tickers you guys want me to go down? If not, I'm gonna jump off the stream here and head on to the live stream with the team on Discord, and we're gonna be trading live. All right, I don't see any more. Have a good trading session, guys. Always manage your risk. Don't go crazy. Wait for the market to get directional, then take some trades and increase your risk then. I'll be honest with you guys. I haven't been really putting on much risk. Like me making this 18,000 or 20,000 per week, it's actually pretty. Like if you look at last year's, logs, like there were weeks I was hitting some monster numbers. Like look at this one, right? I was hitting like 55,000 weeks. And some weeks were like really, really good. This year, I haven't hit my stride yet, and that's because I'm trying to be as risk averse as possible, as this market is risk off. So when the market gets a little bit more risk on, I'll be more confident in taking some more risk and putting it on the table. But right now, I'm telling you, that's another block for me. So if you're facing the same block, you're not alone. I just want to tell you that. And just keep your head up, keep going, be consistent more than anything. Remember, at the end of the day, it's about consistency, right? It's about hitting these numbers day in, day out, and being consistently green, right? You can see my trade journal is pretty consistently green, except for obviously some weeks where I make some mistakes, right? And yeah, just keep it real, okay? Other than that, I hope you guys have a good trading session. Once again, 14 days available. Click on the link in the description if you want to join us. And I'll see you guys on Wednesday for the next pre-market live stream. Take care, guys. Peace, and I love you all. Bye.